Welcome back. This is Jacob Milliken with 9M Investments, and I'm going to be talking about structured notes again today. I did a video back in February with a structured note that was focused on growth. Today, I'm going to walk through a note that I was using with some clients that was just recently called. I thought it'd make sense to walk through how a income note works. So this particular note was through Citibank, a callable market-linked income note. It was based on the NASDAQ 100, Russell 2000, S&P 500. So this 1200 of 1886, 480, that was the initial level back on 11/30/22 when this was taken out. So the term of this note was a 1-year callable, non-callable for 6 months. So that means after 6 months, Citibank could look at this and say it was at their discretion to say, hey, are we going to call this note, yay or nay? Protection onto the downside gave 30% protection, complete or up to 30% protection to the downside. Fixed coupon, 15%, so a very large fixed coupon on a monthly basis. Again, go back to when this was traded, 11/30, lots of volatility in the market. Really think of income notes as a option strategy. So the higher the volatility, the higher that income note is going to be. So at that point, it was 15%, which even for the time was a higher number. Again, it was a call type, was issuer call. So Citibank at any point after the 6-month period can call it at any month. And again, up to their discretion. So if it goes to maturity, it would be 12/5, but we'll see how this note actually worked out. So as you can see here, based on the note here's the initial levels of the lesser of those 3 indexes. So over time here, sorry, let me scroll down here. The NASDAQ Russell 500 shows you the initial level, the return over the 6 months, as of 6/29 when it was called. So how do these work? As long as we stay in between the initial level and that 30% barrier, as long as we stay there every single month, it was going to pay out its 15%. So that means it's 1.25%. As you can see, every single month, they were well above the barrier. So this particular paid out 1.25, 1.25, 1.25, and you can see total percent 7.5%. Now, after this call period, Citibank said, nope, you know what? Times have changed. We're going to go ahead and call that note. So over that time, you got your 7.5%. We roll that back, we get our principal back. Again, how these are invested, you can do a minimum of $1,000 up to whatever number makes sense for your portfolio. Then you just roll it into the next one. So these clients here, invested their 125. We made 7.5% on it, and they're going to roll that into one of these other notes that are coming up. So just kind of gives you a walk down of kind of how these can work, how they're set up. Typically, when you're looking at the protections levels, you want to make sure it's something that makes sense for you. And with these notes, they're like they say they're structured, so you can have notes that have higher or lower initial barriers, more protection built in. So it really depends on who you are as an investor. If you want to have more protection, we can build that in from the start and kind of give you a better idea. So really a good product, a way to kind of structure the risk for whoever you are. So anyway, I hope this was helpful. If you have any questions, just reach out and I'll be happy to help. Thanks. Have a great day.